Thanks very much to everybody for joining us here as part of the program that we're running at EXPO Real in the International Investors Lounge. This is live for you in the room, but more excitingly, it's live as well. Not more excitingly, let's say as excitingly, it is also live online. So thank you very much to everybody who's joining us online. Let's start with quick introductions. From my side, I'm head of content here at Real Asset Media. We have a product called a journal and a membership which is called Impact, which is around ESG, social impact strategies. And this is a topic as part of one of those live events that we're running associated with that. There's copies of that behind you, so if you're interested in seeing that, please do grab one. Let's pick up, I suppose, just in terms of the speakers. So quick introductions. Andre, let's start with you. We'll work our way down. Just a quick introduction of you, what you're doing, particularly in this space, so that then everybody here understands what perspective you're coming from. Andre.
Well, thank you for the opportunity. So I'm Andre Vreman. I'm chairman of Climate Neutral Real Estate. So we are a public-private partnership between 20 leading companies of the Netherlands, together with the government of the Netherlands, with the aim to create net zero cities and buildings, with also the climate neutral part, with the real estate part, with also a keen eye on value creation of those developments.
Great, thank you. Déborah.
Hello everyone, so I'm Déborah Fischer. I'm a partner in ESG consulting and assurance in Belgium, and I represent the RSM Real Estate International Group today.
Great, thank you.
So my name is Lisa. I'm a sustainability and asset manager at Schroders Capital based in Munich. And I also focus on implementing ESG strategies in the asset management.
Great. Assem.
Hi, I'm Assem Alami. I'm heading the origination of Berlin HIP, the international origination. We're part of LBW Group. Our institution was one of the first movers in ESG compliant bond issuances. So, yep, it's part of our DNA.
Great. Ron.
Yeah, hi, I'm your colleague Richard. So you were referring to our lovely Impact Journal. I'm the managing editor, and I'm also associate professor at the Amsterdam School of Real Estate.
Great, and this is unhelpful to anybody online. So Nicole here at the Cerise top is the editor of Impact, so if we're not writing about you, we should be. See Nicole at the end. Let's start with what's changed. I said, why don't we pick up with you first? Because obviously here we've got finance, we've got investment, asset management, we've got advisory. We've also got a very much a top-down approach from you as well, Andre, in terms of the climate neutral side. So let's pick this up. I suppose, what have you changed? What strategy has changed? If there has been a change of strategy, what are you seeing, Assem, over the past 12 months?
Over the past 12 months, we haven't changed much. We've added some little bits to our frameworks. As I said, we're one of the first movers in issuing green fund briefs, green covered bonds, sustainability linked bonds, social bonds, etc. So we had that in our system for quite a while. But we've seen in the investment community, our clients, that ESG has really it's now standard. There's none of our clients ignore that the ESG issues, and they know that they have to go down that route. And sometimes it's also something where our clients discover that being ESG compliant is just simply also a matter of being more efficient and cutting costs.
Okay, so that's playing into that as well. Lisa, interested to pick up from your side. Do you see it moving more towards, I guess, implementation, therefore practical implementation, that the discussion around whether it's a good thing or not is dealt with, and we've moved on from there?
Yes, definitely. We see ESG is the base, and we are lucky us, we don't have to explain what is ESG anymore. So we are in the implementation phase, but also because of the regulatory pressure, like companies, they have to report, they have to be transparent. So there's no way of just closing your eyes and getting a step back. So we clearly see that interest in ESG is strong.
And I guess it would be interesting just to pick up. I'm going to come to the E and the S and the G, and we'll discuss those as kind of separate parts of that. But I'd be interested to get your view, I suppose, on what is the capital thinking and doing when they're looking at E, S, and G.
I think especially for the S, it is more and more important because investors as well as tenants, their needs are changing. So it is clear that you also have to include the S more and more. I think in the last years we focused a lot on the E. Of course, not enough, but I think there is now time for also, just focusing on impact investing, because like we have to understand now what will come in the future and also what our tenants will need. So it is a completely change in the mindset, also including hospitality approach and so on. And that's also, everything is like under the S. So for the future, yeah.
And let's start, I suppose, with the E and the climate neutrality side, Andre. So I guess some of those top-down larger factors, what are you seeing there? What's driving this at the moment, and where do you think we are at the moment?
Yeah. Now, compared to last year, when did you hear for the last time that we have our targets in 2030? Maybe some time ago. Last year we still said it. Now we're 2035, 2040. If we have a climate crisis, we see in this moment in time, I think we renewed attention that 2030 is still achievable. We don't have just new real estate. We have a lot of operational issues. So that's one thing I would like to bring across, to encourage. And the second one is we have to look at the total climate performance. We talk biodiversity, we talk social impact, we talk healthy buildings. But when the emission score, it's not just carbon. It's also methane of landfills and wastewater treatment. It's greenhouse gases of refrigerants, of air conditionings, but also heat pumps. And so we have to an integrated approach. We're changing all kinds of things, but we have to keep the umbrella approach. We're here against sea level rise, against global warming. How can we get the biggest bang for the buck, as a popular expression maybe? Where should we invest our money to have the fastest maximum impact for climate on the shortest possible time?
Interesting. Let's pick that up as well, Deborah. Just from your side, obviously, there seems to be general consensus that the E, I suppose, is the most consistent at the moment in terms of the real estate side, because it is beginning to be more measurable. You can see that there's beginning to be differences in terms of values. But what are the challenges and the risks here when we're looking at the E?
Yeah, I think when we look at the environmental side of real estate, there's indeed a number of risks that companies should address. Obviously, the carbon transition is a major one, but you have also all the stakeholder attention and the expectations in terms of building efficiency, in terms of reducing the carbon that come into play. And linked to all of this, because you need to transition with new investments and you need to finance all these new elements. And so there is definitely a financing risk for me that arises, especially if you cannot demonstrate that you are doing enough on the E side.
So let's pick up that I mean, that's interesting, the financing risk one. And obviously it'd be rude not to ask you that question, Assem, you're representing the financing side. So I suppose, what do the investors, the borrowers in that sense, have to do in order to be able to convince you that it's a sustainable investment from your side? What are the things that you're having to look at when you're thinking about making a loan here and investing your capital?
Well, you're perfectly right. We are looking at the sustainability of the investment. A non-sustainable investment is not our cup of tea, as you might understand. We're looking at CO2 emissions. We're not looking necessarily to certificates. Any sort of certificate is sort of an indicator of the efficiency of the building, but not a proof. So we're looking at actual energy consumption and CO2 emissions. If the borrower approaches us with a non-compliant building, that's possible too. But then we need a story, we need a plan how to get this building to become green or greenish. Let's put it this way. Yeah, and that's something we're quite eager to accompany. We're quite eager to say, okay, let us go together down the route to turn this building into something green or environmentally friendly.
And just picking up on that, how do you see the climate risks? Obviously, in the US, we've seen banks no longer lending, insurers no longer insuring. How do you see that when you're looking at the European market? Is there kind of less of a focus on that because there's a view that it is less extreme here? Or how do you look at climate risk?
Well, there's a methodology which is quite clearly defined in the rules governing the valuation for real estate banks. So our valuation guys will be able to be more precise in their response to that question. But what I can say is that we are assessing the climate risk. We're assessing it as physical risk, but also in terms of risk for the third use or the liquidity of an asset. So we are viewing those risks in very various ways, and it is a more and more a factor which will influence the value of the asset.
Yeah, maybe let me jump on that one, because it's all about exclusion, Richard. And that's also maybe a question to the audience over here, but especially the experts. Do we see exclusion in the value chain? Indeed, it's on the borrower side, but also whether it's investable. When you're not compliant, we're now in the implementation phase where you don't get proper finance or you don't get a license. And I think that's now the next phase of being compliant in the value chain, that we're having the right measurements. We have the CSRD, but also the value chain approach when you're with your scope 1 and 3, that you need to actually report how you're aligning in your value chain. And I'm actually quite, can you maybe give some examples about a positive exclusion in your own work field, where you say, well, we're making selections in terms of clients where we also collaborate with. So if you don't have the right DNA, if you're not compliant, then you're out of business. Because I think that's the way we're heading to.
I can say something as a short kickoff. For us, this has a technical component. So the traditional model for a new model is that you have an architect, you have engineers, then you get to contractors who then get solution providers. To speed it up, we have to squeeze that into one. So in the design phase, the solution providers and all those parties have to be involved. Otherwise, we'll never get the best result in the short time that we have. But on finance, it's also the same. If, for example, cities and real estate investors and banks, if you don't talk very early phase, before your concept is final, what this project would look like, I think you miss the best chance for the top performance.
It would be interesting that's an interesting point. And I wanted to drill down a little bit into some of the kind of practical elements. And Lisa, maybe, obviously with the focus on asset management, what are you doing there? How are you involving, I suppose, how is the asset management working with the property management, with facilities management, with those kinds of things? What are the practical day-to-day things that you're doing or looking to do that can enhance this?
That's an important point. Of course, you need your property manager. It is the key person also to the tenant, of course, and to the facility manager. So he is responsible for almost everything which is also related to ESG. So it is great important that your property manager is understanding ESG, and it is not just a key contact person within your property manager who's responsible for ESG. For me, in the end, every property manager should also be kinda an ESG manager. So I think also this professional field will change. And it is also important for us that we include ESG scopes within our contracts with the property manager, so that it's also clear who's responsible for what, and of course that the property managers get paid for it. Of course, then there's the facility manager. It is the most important person when it comes to the asset by itself, because he's on or she's in a building like every day. They know how many users are actually in the building, are the lights on, are there kind of issues we need to fix. So we also include ESG in our facility management contracts. And of course, then it's all about collaboration also with your tenant, because in the end, we need a tenant for minimizing our carbon footprint. So it is like you need everyone, from the asset manager to the tenant, good collaboration and transparent collaboration.
May I ask a question about it? Because how do you tackle the split incentive issue?
Yes, we have fees for that. So we have ESG scopes within our property management contract, and of course they get paid for it. Yeah, so that is important.
But to drive the alignment, because that was the problem in the past, that you make an investment and you don't see the benefits on the same side of the balance sheet, but you're tackling this and also creating alignment.
Yes, it is important, because nowadays not all our contracts have already those ESG alignments or scopes. Of course, it takes some time, but in the end, that is the key. Yeah.
And I'd be interested just for you, Assem, how do you translate the goals, I suppose, into actual action points? Does that mean that there are, you've got in place targets, you've got benchmarking, you're then using that to assess the amount of green loans you give so that you can also kind of check your own progress?
Exactly. Well, first of all, just a remark to your question. Banks, at least in Germany, they do proceed to ESG scoring. That ESG scoring is made to 60% of the asset scoring in terms of ESG, but also 40% of the sponsor behind the investment. So we're not only looking at the asset, is that green? If the sponsor is a very responsible actor, then the scoring will be good, and a good scoring means better pricing. So there is a very hands-on approach to that, and to make a difference there. Now coming back to the KPIs, our own KPIs are set by different on different levels. First of all, we have banking regulation. Second of all, we have our CREM path, so the decarbonization path. And then we have our own KPIs, such as, for example, our ambition to have a portfolio of at least 40% green buildings. Green building being defined by our frameworks. So that those are different levels where we attack. So it's going to be really a question where the CREM path and the KPIs for each institution lies. That's how strict the bank will treat those ESG questions, right?
It's quite interesting. We had a session early yesterday, a kind of breakfast, an ESG breakfast, sustainability breakfast, looking at some of the kind of broader top-down trends that were coming through. One of those was biodiversity, which I'd like to pick up a little bit on, but also the proliferation of standards and how you can then create KPIs, maybe by the industry working together to come up with 10 key KPIs that everybody can agree on, so that it actually becomes much easier for people to understand what's happening in the industry. So we can also pick up that. But Déborah, I wanted to pick up with you just the biodiversity side. Is that an element that you think is going to be driving things going forward?
Yes, definitely. So I think the main focus so far has been on carbon, and of course with very good reason, and the focus should still remain on carbon. But biodiversity is very much linked to carbon and is also very much impacted by real estate. So I think the next big thing is probably to work on the biodiversity. And what we see now is that there are standards developing to help companies measure and take actions. So I think it should be considered when real estate projects are being put together, that you have, green spaces, that you integrate sustainable construction aspects so that biodiversity can be protected.
Now maybe I'm curious, what's your take on the European playing field? Because also your company, Assem, you're having quite an interesting scope. There's quite some differences between geographies. How challenging is that also for your clients?
Yeah, I think biodiversity is a very local topic. Yeah. So depending on where you are active, even within a single country, you can have a lot of different issues. So it's a difficult topic to tackle for that reason. You have to look where you are active. Are you in a biodiversity protected area? Do you have to do something specific? So it's really complex because you have not one strategy, but a multitude of strategies depending on where you are located.
And Andre, I'd be interested to get your perspective, because obviously you're seeing things from not just Europe, but also from the Middle East and from North America. Are they dealing with it differently in terms of the aim to be climate neutral, in terms of KPIs, in terms of those elements? How is it being monitored, I suppose, in order to drive things forward? Is Europe ahead of others? Where are we?
Well, thank you for the question. Of course, we have done a lot in Europe already. As we said, ESG is commonplace. It's also in legislation, so it means there are also subsidies and there are also penalties if you don't perform. So that's less in the Middle East. So we are more dependent on the goodwill of governments and companies, which drives us as a technology cluster more on really showing the value. Because if people don't really have to, you have to make sure that it's also better in the economics. And you have to go into your total value calculation, including social impact and biodiversity, if possible. Especially with government investors, biodiversity is definitely on the table. With private investors, maybe one step further. For North America, of course, there are a lot of subsidies available and some penalties too, but it's still easier to you have your own options as investors. You can make your own choices easier than in Europe. So I think in Europe so far so good. Let's keep going. Yeah.
One of the topics that appeared as well was particularly power, and that came up a lot in the logistics sustainability one as well. Obviously electrification is being driven across Europe, and it's a way of creating, I suppose, a renewable power source for real estate. So I guess, Lisa, maybe from a Schroders Capital point of view, tell us what you're doing there in terms of that renewable energy side. How do you see that as is that something that you are investing in, you're expecting your clients to invest in? What's the situation?
It is an important topic for us, but not just for us, also for our investors and also for our tenants. So we, for one case in Germany, we are discussing with a tenant about solar panels on our roof. And what is important for us is that we also, if it's working, we want to operate the solar system by our own company. So, in the end, by the asset owner. So, what we see if we want to realize those projects is that regulatory side is kind of dynamic right now. So, we would hope for clearer guidelines how we actually can realize those projects.
And are you looking to self-sufficiency in terms of that, producing a surplus so that it gives something back to the community? What's the aim? I guess it's asset by asset, but nonetheless, is there a kind of central aim that you've got?
Sure. As I said, it is about collaboration, so understanding what does your tenant need. And for this case, I mentioned before, it is that tenant is interested in using energy which is produced on site. So this is a big advantage also for us, that we can have a long-term contract with the tenant, of course. And then it is not just about giving them space. It is about building like a small environment for them, that they feel comfortable. It's about hospitality approach. So nowadays it's not just about giving them space, it is about much more. Yeah.
But is it also shifting, because your question was, is it asset by asset? It looks like that we're going towards sustainable and resilient city developments. So that's also an interesting question. When we had a conversation with all the investors, so what's the scope of your development? Is it an asset? Or is it also in strong collaboration with municipalities, your neighbors? Because also with, for example, the renewable energy, you can't solve it in your own plot. So I'm actually curious to all the panelists, where is the solution? On which level do we find the solution?
Oh my, you're asking me.
Yeah, you're looking at me like, oh my God, don't give it to me.
Exactly, because to be honest, I don't have the answer.
No, but it's a difficult question.
Yeah,
but therefore interesting to discuss.
For the finance industry, we're an indirect actor in the real estate market. So we try to give it a framework. We try to give it a incentive to go in the right direction, and the regulator tries to push us to push our clients in the right direction. But in the end, it's up to the investors and the actors on the ground to identify their opportunities.
I think currently we have, or it is more common to have your strategy asset by asset individually, and then it really depends on the city, and if they are maybe already having some projects going on where you can connect with your neighbors, with small companies, with regional companies. So I think there is potential we currently don't use. Yeah.
And what about whole life carbon? Maybe Deborah, for you, what about whole life carbon? How are we seeing that? That appears to be something that is increasingly going to be used as a metric, for example.
Yeah, definitely. So I think the focus now is not so much on construction, but on renovation rather. And of course, looking into that, it's important to know the whole lifespan of the carbon issue, and have a strategy that will indeed take into consideration the whole life carbon of an asset, and also look at the end of life and so on of the asset.
And Andre, what's your perception of that? Do you see that moving more towards a discussion around whole life carbon, and that the metrics will begin to appear for that?
I think it's a great concept, but there's something to add. Because in whole life carbon, 1 ton CO2 today is 1 ton CO2 in 50 years. But in finance, we have a time value of money. We also have a time value of emissions. So $1, £1 or euro today is more than tomorrow, right? So 1 ton emission saved today is more than tomorrow. So that's something we would like to see to add. It's maybe not easy to do, but there's definitely a time value of emissions in this process of whole life carbon.
Yeah.
When you compare wood with concrete, for example, in the LCA analysis, they seem to have the same result. It's a very different timing when you emit your carbon.
Do you think we'll go to carbon pricing, Andre? That in the end you will get, let's say, penalties when you're producing carbon? That's also a little bit of the direction of legislation.
I think that's more beyond the project. It's maybe more for the Schroders and RSM people. Maybe you have a clearer view on that. Well, of course, we promote that, but we also, to our project, we say let's perform on village level or tower level, asset level, as much as we can, and then you start saying what else can I do and what mechanisms are available. But too quickly going there will not making you do your main thing on your own asset.
Certainly one of the topics that appeared as well was very much an increased focus on the S in terms of ESG, that actually there was now a drive in terms of the environment side, but S is the next part of it, and that the regulations will begin to drive that as well. And so that is an area that real estate really needs to start looking at more seriously. So I'd be interested to get the views from here. Maybe start with you, Deborah, on that one, and then Lisa would be interesting as well.
Yes, indeed. So there has been so many challenges in the environmental side that maybe the social aspect is not yet as developed. But I think real estate has a real role to play within cities, within creating the mobility of tomorrow by offering, solutions for charging stations, parking for bikes, things like that. You can look at also the evolution of how we work, going more to different types of organization of work, meaning that you also need real estate to follow those trends. And real estate is also part of a city as a whole. So there's urban design, there's equity, social value, security to create. So I think there's a whole array of topics that can be addressed within the S side of things.
And I'll come to you in a second, Lisa, but Assem, is that something that I mean, I know the bank has, in general, quite strong strategies around E, S and G.
Yeah.
But how do you see the social side? Do you see that as a growing element? Is that something that you're going to be paying more attention to in terms of the lending side, or is it more difficult just because at the moment it's difficult to value, to be honest?
It is, you're right. But we sort of put our heads together and tried to how can we measure something to put a framework on top of it, right? And how social, when are you social, when aren't you? So to make a long story short, we concentrated on the affordable living and to put a sort of a premium on the affordable living. Now, having said that, that obviously also creates a conflict with the E in the ESG, and to solve that conflict, we said we're going to take out the 15% of residential properties in Germany which are really brown. They cannot be eligible for the S either, and we took those out, and then the rest can be sort of brownish, but if they guarantee inclusion, if they guarantee affordable living, then those properties can be eligible to our social bond program.
And do you get people coming to you in terms of wanting to finance capital expenditure, for example, to make these kinds of improvements, and is that something that you're open to?
Well, that's true for the E. For the S, it's I struggle to see how additional capex can make the flats more affordable. So that's a more rare configuration, I suppose.
Maybe in the operational real estate? Because there you see a bigger crossover between the PropCo and the OpCo.
You're talking about non-residential properties, aren't you?
Yeah, for example, like healthcare real estate, which is much more operational, where you can impact via the PropCo the operational side.
That's the healthcare or education is something we might add to our framework. For the time being, we didn't see the critical mass to put that into the true program.
And Lisa, how do you see that the kind of social value side from the investment point of view?
It is important because we need to rethink our buildings, and we need to rethink also our how we are living. So I think if you now focus on flexible space and also on healthcare, as you said, or on education, you have long-term investments, and then it's also, of course, a good story for your investor, and he's also committed for long-term investing. And I see a clearly strategy behind that for impact investing with long-term yields and good yields.
And in terms of financing that, is that something then when you're looking for financing if you're looking for impact investment, for example, and there are more impact investment funds, affordable housing funds, those kinds of things, is that something where you are then actively looking for investment for and you get a positive green loan because of it, or how are you organising it from that perspective?
I think for that, mostly you need to discuss, as you also said, how can we really make it measurable, and currently I think this is the point where it needs clearer definitions, or where you need more maybe a more structured framework. Yeah.
So really that's a challenge at the moment for that,
Yes.
which is that there's not enough benchmarks and not enough KPIs for people actually to be able to judge that. Okay, that's interesting. And Déborah, from your point of view, obviously we've got CSRD, SFRD, a lot of regulations coming down the line. Do you expect to see the social regulations, because when we started with the regulatory framework on the environmental side, it started and it built and it built and it built. Do you expect to see the same on the social side, that in fact these are areas we will all need to be addressing?
Yeah, I think it will come, probably in time, but it will come. And I can think, for example, as we have the EU taxonomy for the environmental objectives, there will be in the future a social taxonomy, which is also the sign that we want progress on the S aspect as well.
And how do we look at, I mean, I'd be interested to get your perspective on the governance element of this, how that plays out with the other two, because it was an interesting point, Assem, I think, where there are areas where they clash, for example.
Yeah, I think the governance part is necessary. You need a good corporate culture in order to implement ESG. You need ethics, and you need also, depending on where you are operating, but maybe consideration of human rights, which is really important. So the governance aspect is maybe a bit less measurable per se, but it's really important, and it makes a whole with the E and the S in the ESG world. So there's no real transition if you don't have good governance supporting it.
And Andre, obviously a big part of what you're doing in terms of the climate neutral real estate side plainly involves cities, because that's where a huge amount of the CO2 is. So I suppose, what would you like everybody on the panel to be doing to help achieve that? What are there shortcuts that people could be thinking about? What are the sorts of things that you would like people to be doing to accelerate that?
Yeah, there are many things, and many of things our colleagues know. Maybe continuing on the social aspect, affordable housing, we take care of the population in the affordable housing. Maybe we can look for ways in the value metrics for the added value in the lives of the resident. So involving the resident, providing purpose, maybe involving in the purpose of climate neutral real estate if they live in a climate neutral real estate building, and then hopefully also being able to calculate that value, maybe for an institutional investor to be much more sensitive to take that in your calculation. Before we have the standards available, we have to develop examples. Probably.
You also mean that it's reflected in the valuation of an asset? Because that's a tricky part of the question. So maybe you can. It was a dream question from Rich. So maybe you can dream, but it's quite far from reality.
Yeah,
it's an open question.
No, I'm not a bank or an auditor in that aspect. That's why I would love to see it going in that way. I would love to see that going.
It's an interesting question. We're doing a lot of discussion with valuators on this topic, and then it's like, it's an asset level discussion. It's solely the propco, and that's what it is. And it's not related to the workforce. It's not related to the environment. So it's very restricted. But maybe this mind shift needs to shift a little bit towards more the operational side, the area impact. So indeed, what are we measuring? But it takes a different, also skill set of valuators, or also like legislation on valuation. Like, what are we measuring and how do we evaluate? So I'm very curious about, again, difficult question.
Yes.
Yeah, but shall we take it?
Sure.
What's your take on it?
So the take on G, is that your question actually? How do we measure, how do we deal with the G? The governance issue, is that what you're saying?
Yeah, but also the valuation part of Andre, that we should try to get the social side into the valuation, but that's still a no-go almost in real estate, I would say.
Well, yes and no. I mean, the non-social asset will always have a higher price tag to it in terms of funding costs. If we put a social loan tag on a project, then it also means that we're willing to accept a lower pricing. And also because we can put it in our social bond program and refinance on a lower level. Theoretically, practically speaking, it's a bit more complicated than that. And again, we are also looking at the ESG scoring of our client, and that's where funding costs are also determined, whether the scoring is a good scoring result or a bad one, and that is also influenced by S and also the G.
But then also, for example, the workforce accountability, because that's actually part of the CSRD, that you're also taking care of your own workforce, but also the workforce of your partners. That's, I think, a big mind or game changer, actually.
Absolutely, that's included in the ESG scoring.
Also for us, we have, of course, our own regulations and our own scorings, and we include this. I think this is the basis.
Good. We are actually, sadly, out of time. Unless anybody's got a quick question that they wanted to ask, I'm going to scan the room very briefly. Last question from me then is, I guess, if we have an aspiration to be in a better place next year in terms of the E, the S and the G, what does that mean? What do we think we should be doing? So I guess, what is our aspiration for next year? Andre, let's start with you.
I think let's keep the positive energy going. And let's, as we said in the beginning, let's not be afraid of the 2030 time mark. Let's try to achieve something before that with practical, actionable plans, especially in operations and management, maybe more than new build.
Great. Deborah.
Yeah.
Well, you've understood that I'm very much into the social aspects of things, so I would certainly like to see more initiatives and measurements in the social area.
Okay, good. That's a note for us as well, Nicole, that we should try to encourage that.
For me, it is clearly about collaboration, as I said, with the property managers, facility managers, tenants, but also with our investors and, of course, other asset managers. I think we can only make a change if we all work together.
I think that collaboration point is a really interesting one as well. Assem.
I would be enthusiastic about the real estate industry investing more into innovation, particularly into energy producing innovation such as folios for the facades or even paintings. And I'm not quite sure that the industry is already there where it should be in terms of being a driver of innovation.
Interesting, yes, good. Ron.
Yeah, I think there's maybe one comparable with the other impact and ESG one, and that we need a level playing field, and that's a little bit aligned on the collaboration, because if we are heading in the same direction with the same rules, people won't hide anymore, and otherwise we will have the waterbed effect. So if we're pushing it in, then we're going in the other direction, and we're trying to have a quick fix. But I think when we are all compliant, when banks are all in the same types of alignment, investors have the same alignment, and also the real estate developers will have the same behavior, and I think that's what we need.
And interestingly, just as a link with the next session, we're going to be looking at living, and that's going to cover elements like senior living, student, and then we're going to have a specific and affordable, and then we'll have a specific topic on student housing, which of course again has that education side of it, which can therefore be seen as also a social impact investment, which is interesting. Thanks very much for all of your perspectives. Really interesting to get that. Thank you to everybody in the room. Thank you to everybody watching it online, and if you were watching this on demand, thank you very much for watching.